is a former head, of course, of CPPIB, executive at BlackRock, and now incoming chair of the Alberta Investment Management Company. Mark, always great to speak with you. And I want to start right there. I mean, we're now hearing talk about Canada moving to longer duration debt. From an investor's point of view, obviously, there are concerns about the fiscal situation at the provincial level, the total debt of both provincial and federal. How would you rank this when you're thinking about Canada as an investment? Are we doing damage to ourselves here?
Well, look, Amanda, I mean, policymakers are in a hard position here, and I've been on this show before saying how important it is for the government to do everything it needs to do to stimulate the economy in this country in the wake of the COVID-19 crisis. And I think we did exactly the right thing at the beginning. We threw everything, including the kitchen sink, to make sure that we kept that heart beating, to make sure that the economy was in a position to recover. However, as this goes on, we have to start thinking longer term. We have to start thinking about how effective are the programs that we've put in place? Do we need to adjust them? And ultimately, how are we going to pay for all of this? I'm not worried right now. The Fitch downgrade doesn't particularly worry me, but there are limits ultimately in terms of what we can do in terms of fiscal policy, and this is a reminder. So it makes it that much more important to ensure that the programs we are putting in place have the right efficacy. We have to make sure that those programs are having the intended outcomes, and we have to make sure that the incentives are correct. And I think it's absolutely fine for government to go back now, having had to act quickly and reassess, and not just reassess what government's doing, but reassess how government, both at the provincial and federal level, can work with the private sector to ensure that the economy is stimulated. Because at the end of the day, it's going to be the private sector that's going to get us back to full employment.
And I mean, when we think about doing that spending correctly, one thing we're hearing, Mark, from a variety of places is that the government supports might need to last a lot longer than government probably hoped. In other words, even if and when we get past the pandemic, and we should note we're still not past the pandemic, but if and when we do, many businesses are now saying the supports need to go on months and months longer. We just heard from somebody the other day, almost a year longer for some industries. So just in terms of how you think about government's willingness and ability to do that, do we have the capacity to offer those supports to the private sector?
Well, today, I think we still do have the headroom, but we have to be long-term in our thinking. And we have to think about how we're going to build a resilient Canada for the very long term. And this is an opportunity to do that. So we have to think about stimulus now. Should we be thinking about long-term infrastructure builds? You can think about what we did in the 1950s to help stimulate the economy and the dividends of those decisions still being positively felt today. So I would encourage us to now take the time, catch our breath, recognize that this may go on for a little bit longer than we expected, that even when we have an epidemiological outcome, that it's going to may take some time for the economy to fully recover, and ensure that those programs that we've put in place are doing what we want them to do, and ensure that new programs are very long-term oriented and are going to pay that continual dividend. So I think it's fine for us to now go back and to make adjustments to those emergency measures where required. And again, let's make sure the incentives are right, and let's make sure that the outcomes are the ones that we expected. We just have to make sure that we're getting the appropriate bang for our buck. Not saying don't spend the money, let's just make sure we're spending it wisely.
I mean, one of the issues that the Fitch downgrade highlights that may be of a more pressing concern in the next few years is the fact that the fiscal capacity and situation of the federal government is very different than some provinces. 'Twas always thus. This is why we do obviously equalization, and we know that that's how the federation works. But it could actually get a little thorny here. And at what point do we need better oversight, kind of a better acknowledgement that the finances of one province have a direct impact on the citizens of every province, not just that province? Do you think that we're focused enough on that?
Well, look, I think we are all in this together as Canadians. It's the strength of a federation. We have to make sure that we have the correct balance in place. But at the end of the day, my personal belief is we are better off as a country. We're not that big a country in terms of our population. And so, although we're large geographically, having scale in these situations matters. And, as we've seen over the last decade, some parts of the country may be up when other parts of the country may be down. And so I think our ability to work together is very important. We have to make sure we're doing that in a way that's sustainable, however. And that means that we have to ensure that not are we just responsible at the federal level, but we're also responsible at the provincial level in terms of our spending.
It's super topical when it comes to the CPP, right? I mean, you were there as it grew in size and clout to one of those big assets under management in the world. Alberta now musing about going its own way. Would you favor that approach where provinces kind of break away from the CPP?
Well, look, Amanda, I'm a believer in broad-based government pension plans. And the more broad-based they are, the better you're able to mutualize risk across generations and across demographic changes. So I am a believer in government pension plans providing a base level of support to the population. And again, I'm a believer in mutualizing that risk broadly. You know, CPPIB, which, as you know, I led and helped to build, is one of the most well-respected asset managers in the world. And I'm very proud of that. And I think it continues to be that way today. What I would say as it relates to Alberta is that Albertans also deserve to have a world-class investment manager to manage their pensions and to manage things like the Heritage Fund in the province. And so, you know, I see my job coming in as the chairman to help build on AIMCO's foundation and to allow Alberta to have and to continue to have what can be a world-class asset manager for Alberta pensions and for the Heritage Fund. Now, you know, there's broader political questions that come about. That's not my job. I'll leave that to politicians and policymakers. Right. My job is to help build a great asset manager for the province.
And you'll probably be happy we only have about a minute for this, Mark. But we just saw, you know, a fund manager let go, changes at the top. There was a risky bet made on volatility in the market that went very wrong, $2 billion wrong for AIMCO. How much of a culture shift do you need there?
Look, Amanda, I don't know is the answer. I will come in as the chair of the board next week. I'm not privy to any information that you don't have, frankly. I know that the board is doing a comprehensive review. I look forward to receiving the conclusions and recommendations from that review, and I'll work with the board and management when I join to implement those recommendations. But certainly I know the current board is doing a comprehensive review, and I look forward to receiving it, as do many Albertans. All
right, Mark Wiseman, great to have you with us. Really appreciate it. That is Mark Wiseman.